Now we will practice a couple of exercise problems. Jelly co-processes jam and sells it to public. Jelly leases equipment used in its production process. From Squishy, this year Jelly leases a new piece of equipment from Squishy. The lease term is 5 years and it requires equal rental payment of $15,000 at the beginning of each year. In addition, there is a renewal option to allow Jelly to keep this equipment one extra year. And for a payment at the end of the fifth year, $10,000, which is reasonably certain that Jelly will exercise. The equipment has a fair value at the commencement of the lease, which is $76,024, and estimated life is 7 years. Now, here is the discount rate, which is set by Squishy, 5%, and it's also known to Jelly. Now, few more information, and those are important. The lease does not transfer the title, does not contain a bargain purchase, and the equipment is not of a specialized nature. Now we will do the lease classification test. So from the last line, it's clear that it does not satisfy the transfer of ownership test, and it does not have any bargain purchase option, and it's not a specialized product, so it must have some alternate use at the end of the lease term. So the alternate use test didn't work too. So now we will do two more tests to check whether it falls in financial lease category. One is economic life test, and of course the other is the present value test. So for economic life, we all know that the lease term should be 75% or more than 75% of the entire economic life. Now if you see, the regular term is 5 years, but there is one extra year that they have the lease renewal option, and it's very reasonable and certain that the leasee will exercise it. So that means when we will consider the lease term, we will consider this 5 plus 1, which is 6 years. And now if you see here, the total life is 7 years. So if we divide 6 divided by 7, you will see it's close to 86%, which is greater than 75%. That means the lease term test, an economic life test, actually meets here because the lease term is greater than 75% of the life of the asset, so we can classify it as a finance lease based on this test. Now if you do the present value test, here remember, for present value test, we will consider all the lease payments, which is given here. The lease payment will be at the beginning of the year $15,000. We don't see any information about the residual value, but they have a renewal option which is certain, so we will also include that when we will calculate the present value of the lease payments, and then we will compare it with the current fair value of that equipment, which is $76,024. So now you know how to use the table present value of annuity due, since it's at the beginning. So we will be using the annuity due table, and we will multiply it by this $15,000. So now if we take the present value of these lease rental payments, this is $15,000, and if you look at the present value of annuity due table, and if you consider these 5-year terms, which is here 5, and if you also consider the interest rate, which is 5%, so we will see here these factor here, present value of annuity due factor is here 4.4595, and if you multiply by that the present value of all these rental payments that will be made at the beginning of each year for next 5 years, it comes out 68,000 $189. Now it is also certain that they will extend the lease. That means the renewal option will be exercised. We can also call it bargain renewal option. So for that, you have to pay one lump sum amount at the end of the 5th year. So we will look at the present value table. It's not an annuity table, it's the present value table. So what is the present value of $1 that you will receive in 5 years and based on the 5% interest rate? So now this will be the present value of renewal option, renewal payment. So the renewal payment is $10,000. And if you look at the present value table, you will find the present value factor is 0.78353. And if you multiply this by 10,000, it will be 7,835. And if you add that, which will be $76,024, you might have few cents difference. This is just because of these decimals when we consider these present value factors. Now we will compare these present value of lease payments with the fair value, and which is exactly 100% equal. So that means the present value of future payment is exactly equal, and of course it's more than 90%, so it also met the present value test. So two tests are met, the lease term test and present value test. So we can call it's a finance lease.